Yeah, I know that some people are having issues with breakout. What we went over was that we have the, oh, excuse me. We have the miss before and miss after. That doesn't always happen actually. It could be like this, but it doesn't always happen. What you'll see is sometimes you'll get the wick test here
Yes, I did
or
have some with the week,
even like that.
but
Hmm.
does it count the week like a miss
So
or?
what I tell people is that, yeah, this is still considered a breakout. This right here is a breakout. It's still a breakout. But the fact that it tapped into it, it makes this level unfresh, but it doesn't mean that this level is invalid. Not quite. And the reason why is this is kind of a hint. Because if you let's oh, someone's trying to come in here. So if you will, okay, so this H4, right? And you were able to identify that this is a breakout right here. Okay. You were able to see price broke out from this point, but you want to take advantage of this breakout right here. And this, okay. What do we got here? Okay, you want to get advantage of this, take advantage of this breakout and retest because well actually this one worked out. This is a fresh one. See, there's all this miss here, breakout, miss. So you can enter here. Let's find an example that is not so clean. This one, let's see.
Can I say something?
Yo.
Not in one, but in too many examples,
Yeah,
the pattern is perfect, but the only thing is when the price goes back to the breakout line, the price
yeah,
closes the price closes below the breakout line for 2-3 candles and it shoots up.
yeah. So that is going to be addressed with trend lines. Um, so this is what it is, right? Because you guys are making the effort to come here and learn. So I'll tell you. So this is breakout right here. This is something that we already determined, right? We have the miss here or miss here, and we want to enter at this level. When you see price come in like this couple times or a couple candles or chilling here for a little bit, that's totally fine. We don't enter at this level. We actually enter at the trend line. You're going to learn about that, but a trend line is for buys. Trend lines will give us the entry like this. Okay.
Okay,
So
understood. Yeah.
we don't enter exactly at this level. We enter after it crosses down this level or jabs into it with the wick. If it closes below, that doesn't mean that it's going to this is bullish. It doesn't mean that after this breakout it's gonna go bearish. No. We have
Yeah,
to figure out other reasons why it's gonna go bearish. But
because
when
what
it
I
crosses,
sorry,
excuse me.
sorry.
No, go ahead, go ahead.
No, what I recognized in the 1 hour, it does it with 2 or 3 candles, but in the four
Yeah,
hours, it appears like a wick.
yep. My favorite time frame, to be honest, is 4 hours. I will teach you guys how to trade the 4 hour time frame. It's like my favorite, bro. It's literally like I don't know, like very recently I've been doing very good at getting tight entries. I don't know if you guys seen the last trade that I had right here. This is actually a 4 hour entry, but I had zero float right here. and
That's
there was
amazing.
other examples as well. So when people ask me like, do you use M5 and M1 entry, M1, M5, M1 confirmations? And it was like, no, I don't use any of that because I understand that a lot of smart money traders, they're going down to what is it? Refine, over refine and stuff, get those really tight order blocks. We don't have to do that. With trend lines, you'll be able to get really tight entries. That's gonna come Tuesday. Tuesday is gonna come for trend lines. So example, like you could get, this is H4 time frame, right? You can get these type of entries, bro. Like it's no problem. The reason why we're studying the levels first is so then you could get this down. Where's your SNR at this point? You would see that this is your SNR. You don't enter here, you enter at the trend line. So not down here, you enter here. If you enter at the SNR level, then you're going to be almost 70 to 80 pips drawdown. So you
True.
always need the trend line for entry, okay? And you already are bearish for this example. You're bearish, so it's like, all right, well, where are my other confluences? And we'll go over confluences later. I don't want to complicate it. There's a lot of material coming up the next few weeks. So I really want you guys to get the gaps, the SNRs, and to speak trend lines right. It's very
Hello.
important. What's up?
How are you, brother?
I'm doing good.
Sorry, brother. Basically, I was in job interview last week, so that's why I can't do any homework. I will do it.
Sure. No problem, no problem. I appreciate you telling me. Like I said, man, I don't want to rush this process. I don't want to make it seem like every week we have one class and then after the education is over, I'm gonna leave you guys. No, I'm not gonna do that. I'm gonna make this
Thank you.
yeah, I'm gonna take my time with you guys. I don't want to because you guys are putting the effort in to learn this stuff and I don't want to leave you hanging. So don't worry
Thank
about
you very
that.
much.
Don't worry. I know everyone has a job. I know everyone has something going on. So it's totally fine. There's no rush. The market is not going anywhere. The market's here. They're gonna be here even when we die. So no worries. Markets are not going
Thank you
anywhere.
very much.
No problem, no problem. All right, so breakout. This is an example of a breakout SNR. Okay. Like Alex was saying, oh, it closed above it, and then a couple of candles, and it closes below it. That's totally fine. That happens. And also this example right here, we have a jab into this level. That's totally fine as well. That doesn't disregard the fact that this is a breakout and price is coming back to test it. That doesn't disregard it. This is H4 time frame. When someone else is coming. Okay, when you do your analysis, we're gonna go over multi-time frame. But so you have this level marked out. You see that price is coming into it. You can also use multi-time frame analysis. So what you're gonna see is that this comes to this level right here. All right, but what else can I determine? Well, we have a couple gap levels here. We have that gap level, we have this gap level, and we have that breakout level. So then what can we determine? If you don't feel comfortable to enter from the H4 time frame, what you're gonna see is, all right, we got these three levels, price came up, tapped into it, closed below. That's great. That's fun. That's fine. What do you see? What do you see? Come. You see, okay, I don't see anything on H1 for entry. Let's go to M30. If you don't feel comfortable enter from H4, then you go down lower time frames and you'll find that You have anything here? Yeah, you do. You have this gap level you can enter here. If you didn't get this initial entry, which is fine, because if you look at people like AKFX or even other people who trade, like, let's say smart money, even smart money concepts, what you see is you want to look for a rejection and a breakout, right?
True.
Right here, you could enter from the H4 time frame. How? Let's look at this level here. You can enter that 1, 2, 3 taps. Your entry comes here. Me, I always take that kind of entry first. I always take it. Put some low risk here, and I'll enter. You'll see my positions. Most of the time, I'll get that top entry, and then I'll get the bottom one too. So let's see how you could also get involved into this entry again. We have this gap entry. Why this gap though? Why this one? This was the last gap. We're gonna go over this again later with the advanced topics, but this was the gap level that caused the move into this breakout level, right? So then when you want to see price violate this gap level, and it's called decision level. We'll also go over that when we do storyline and direction stuff, but this is the decision level. You want to see price break this level out, which it did, and you want to see price come back and test it, which it also did right here. And it also lines up with the gap, tested a couple times. You also have another gap right here. So all this stuff will be covered. First, we're going to focus on obviously identifying the SNR and the gaps. And you see, right, I was working from H4, H1, and 30. That's how you're supposed to work this strategy. You're supposed to bounce between these time frames and find the reason to enter the trade. Let's go over some more breakout examples, because I know that's something that you guys were concerned about. So this is also breakout level.
Yep, clear.
No, miss here. No, sorry. Miss here, and then it was breakout of this level, and then this single candle is a miss. So the next time price came back into it, you could enter. How do you enter this one? You pull a trend line. Valid. Yeah, it's valid. So you have 1 tap, 2 tap, 3 tap. You enter here, see how much drawdown you would get. Use a 20 pip stop loss. 20 pip, you would be a little bit in drawdown, but it's still you're good. Let's see, and you would have gotten that. Let me take this out. That still would have been good. Let me see if there's another trend line actually. No, actually that's the only one I see. That's all good. It worked out.
Do you use buy stops or you use limit orders?
No, I'm one of those people that enter at the market orders.
Market
Yeah, I don't
orders,
use.
okay.
I very rarely use any other types. I'm always on the charts monitoring. The only time I ever really do use limits is on gap levels. But I learned that when I was learning this stuff, my teachers were telling me to just set a limit order at gap levels. Let me try to find an example, then you know what I'm talking about. Let's see. Yeah, this could be one. Let me see. All right, let's just hypothetically speaking, right? This is a gap level and it's been tested once. Say that this level right here tested this level. So like this. What I was taught was you just place a limit here. And you can use 20 pips or 30 pips stop loss. I'm gonna put 20 pips here. My mentors told me that you could do that for gaps. Because for gaps you don't need a trend line. But I usually just enter at the market. Because I'm gonna be active for this. I don't wanna set a limit and then walk away. I actually monitor everything. So I'll enter here, but then I'll enter positions like that too. That's how I like to trade. Not just one layer. I use multiple layers because it helps me. The reason why I use layers because check this out. This is some logic that you guys will also need and might want to consider when you trade live is again, you have this level and then prices coming into it. Do you want to put all of your risk on at one level right here, or do you actually split it up? So say you're risking 1% or something like that, whatever it is, 1%. If you put 1% risk right here, then your floating drawdown is going to be calculated from this level. So 1%, it goes up 20 pips, you're down $1,000. Whereas if you layered like this, then you go and draw down, say whatever, 15, 20 pips, you're going to cut your drawdown to maybe $400 instead of $1,000 if it's a 1% risk, because you're entering at a better price. That is an advantage for layering. The disadvantage is that you have to manage all those layers, but I think over time you'll get used to managing all those positions. And it's not really that hard especially if you're using a PC, because you could just close it all out, you'll learn more. Yeah.
Now, doesn't that means like some of your orders will not gonna be get triggered? I mean, means like you entered the position less.
Well, when you layer, you're actually just doing market orders. So you're just entering again, like at market price.
Okay, got it.
And you do get filled. Yeah, I never had that issue when you don't get filled. All right, so breakout. Do you guys get it so far?
Yeah, one more. For gap breakouts, do you need a miss for before and after the breakout?
No. Okay, so a gap breakout. Let's see. Yeah, breakout. I'll show you some different variations because I know some people will see these examples come about. So let's see. This is the basic look of a gap right here, breakout gap. Right? We have test here, test here. We know that, right? You have this bullish trend. Price breaks out this gap level and then test it once. You can enter at this one right here, right? Sometimes this happens as well. I'm gonna take this one out. You will see this happen. I mean, it's just variations, but it's nothing crazy. But you'll have examples like this as well. You have the tap before the breakout, and then the second time that it comes back up, you can take this out as well. Something like that. What else? What other examples? I mean, that what's that?
Yeah, because I saw quite often like when there's always like a retest right after the breakout.
Yeah. Does that answer your question? You can use those.
Okay.
You can use those, no problem. Yeah, you can use those.
So even means like after right after the breakout, there's a candle retest is still valid, is it? I mean, on the next.
Still valid.
Okay, thank you.
Still valid. Let's go over some examples. Let's go over some examples. can see, okay, this is breakout gap, breakout gap. Okay, so you have the gap level, price closed above it, tested it. Your entry can come to this one. You target 20 pips, 20 pips, 21 to 1. We'll go over risk management as well. In the beginning, I recommend you guys to use 20 to 25 pips. If you use H1 and M30 and below, use 20 pips, right? If you go above H1, oh no, excuse me. H1 and below, you use 20 pips. H1 to H4, you use 25 to 30 pips. All right. From here on out, don't try to go like to M1 and M5 to get those tight entries. Don't do it. It's not necessary. You're gonna drive yourself crazy. You're gonna take a lot more losses. One thing about my strategy and my approach and my psychology is that I like to win more than I lose, because I like to focus on high probability trades. Whenever I try to over refine, overdo this, overdo that, then I lose actually more than I win. So if you can just find these setups through your back testing and see these setups on that 30-minute time frame, just take it on a 30-minute time frame. It's fine. I know also people are like, a couple of people here are trying to do scalping, and when they ask me like, yo, can I scalp? Yeah, you can scalp, but you can scalp from the 30-minute time frame too. If you do this and do 1-to-1, see this one, right? This is 20 pips, and then you go for 20 pips right here. You're in and out in less than 30 minutes. You already got your 1-to-1. You're out, right? So then you look for your next setup. You see on this, let's see. Yeah, you see that you have a 15-minute level right here. How can you get involved to this one? Pull a trend line. That one, no. Nope. Let me see. So if there's no trend line, then there's no entry. So let's see. Another example would be something like this, right? First, classic SNR, trend line. There you go. Enter at this trend line, 20 pip stop loss. That's 10, 20. And you do 1-to-1. Maybe you might not want to use 20 pips on 15 minutes. Maybe you might want to do maybe 15. But that's for you to test. And I'm going to give you guys the layout for risk management, and it's up to you however you want to use it. But you would have hit TP already for this one if you wanted to scalp or didn't have the patience to hold it. Yeah, so any more questions on SNR before I move on to gaps? This is Head and Shoulders. This is broken HNS run. You guys had trouble with broken HNS, by the way?
Yes, I
Yes.
found some examples yesterday.
So basically, when we will just see broken HNS or left shoulder, we will use it. Or is there any other confirmation?
Yeah, so damn, this would have been a great example, by the way. So you see
Yeah.
how this is the head and shoulders right here?
Yeah.
You had left shoulder ahead, breakout, tap into it, and then sell off. This is a broken head and shoulders, and it's come back to test this area right here.
Yes.
That would have been nice if they actually jabbed into it. See if there's anything else that I could show you guys. No, 15. I'm gonna 30. Yeah, so this is broken HNS right here. You have your shoulder, head, breakout. Price comes back to our level to fly up. And you have the trend line right here. So you enter like the trend line. Boom, boom. That's nice. That's nice. So you can see the reason why we have SNR is because the reactions that you get at these points is what's moving the market, right? You can see that. You can see this broken HNS, this head and shoulders, this classic SNR. You see that these levels is what driving the price. So if you focus on these levels more
Yes.
often, then you'll learn that if I focus on these levels, then I don't have to trade all this in between. I don't need this stuff. You don't need this stuff. Like, if you realize that I am only going to focus at this zone right here, then how can you just have to wait. Honestly, this strategy is all about patience. Me, I trade 4-hour time frame. So you kind of realize, you kind of see I trade 4-hour and H1 mainly. And you kind of see like I have to wait 4 hours for a candle to form. 1 hour. Some people like to just trade 30 minutes, 15 minutes. It's totally fine, but I like trading swing positions. I like trading these guys right here. And we'll go over that as well. I don't know the style that most of you guys like. Your intraday. What do you guys like? Can you tell me? Don't be afraid to talk, man. We need
Sorry, brother.
interaction.
Can you ask the question again?
I said, what do you guys like to prefer? Like swing trade or do you guys like intraday?
Bro, basically, honestly, I like to scalp from scalp to swing.
Scalp to swing.
I
Cool.
can do both, but for example, if you would like to get funded or something, you need more action on the
Sure.
intraday than
Uh,
the 4 hours because it will take. I went over the examples,
Yeah.
and you won't find sometimes in the 4 hour too many setups.
Yeah. That's totally fine.
You know what I mean, right?
Yeah. Of course.
Because you have only 30 days and
Yeah. That's true. That's true.
yes. I got
uh,
a same opinion again. Because I used to do like a position to swing, but then like once like I tried taking the prop firms, and then they seem to favor scalp trades more.
Yeah. Okay, so for prop firms, I actually recommend you to focus on H1 and M30. Just don't go too low, guys. Don't go too low. Don't go to 15-minute. 15-minute is acceptable. 15-minute is acceptable, but don't go to M5 and M1 because you're gonna find way too many SNR levels, and you're gonna find way too many trend lines. I mean, for me personally, my risk appetite, I don't really like those time frames, but yes, I would stick to, if you're going to do platform challenges, I would stick to H1 M30 mainly for your entries. And then if you can't, say for example, if you're on M30 or H1 or something, and you see this level right here on M30 and you want to get into this movement. If you cannot find a trend line in this time frame, then what I would do is I would leave this level here from the 30-minute time frame and then look for an M15 trend line. So if you look right here, this valid trend line, no. This is a valid trend line. That is a valid trend line. Let me see if something real quick. M30. No, that's not a valid trend line. Oh, there was a trend line M30. Risk to reward, I would focus on 1.1 to 1.5. I don't know if you guys want more, but in the beginning, guys, stick to that one. Don't overdo it. Don't try to be a superhero. Yeah, man, don't try to swing for the fences. We'll go over how to swing trade in the future classes when we go to storyline and direction. But yeah, this is a 1 to 2 already on this 30-minute time frame. That's great. That's great. And if you so the reason, I don't know if you guys saw it on my Instagram the other day, but I asked you guys, do you guys like to, would you rather, this is a swing example right here. Would you rather put a small position here and just let the price ride up to make money? Or would you rather put a small, put a bigger position here, right? High probability trade. You put, this is like maybe 1% right here. This is 1%. And this is 3%, for example, right? You put 3% here, and instead of trying to catch the whole move, why don't you just take that 3% and ride it up to here? And you're already, you're already done, instead of waiting all this time to collect this. The reason why I like both, the reason why I want you guys to focus on this right here is because you don't need this. You don't need this at all. We're going to learn how to swing, but for this one, if you have high probability trades, then you can put a little bit more size when you get comfortable in putting more risk on your setups. These setups happen almost every day. I have friends who take trades 5, 6, 7 trades from H1, H4, M30, and M15. They do go to M15, but you'll find that you'll have enough setups per day for eating, and you want to put the pieces together for sure. Wait, someone's coming in. Yeah, I actually recommend you guys to stick with 1 to 1 to 1 to 1.5 for now, because when I learned, what we did was we did a challenge where we tried to focus on our win rate, and we'll try to do who can ever get to 10 trades in a row without losing. Right? When you focus on your win rate, you're only going to start taking in your psychology, you're only going to start worrying about the high probability trades. Where does this come from? This actually comes from H4, right? If you look at that logic and you point out levels on H4, you're going to wait for these high probability levels as opposed to stuff in the middle and get caught and get trapped and get sucked into price. When you focus on high probability levels, then you can put more size onto it. Let me rewind price into here. Okay, you're already bullish here. See that this was a miss. You want price to come back into it. What caused this price to push down? There was a HNS level here. You're already bullish and price is selling here. This is counter trend. Price is coming down. So then you'll go to H1. If you don't feel comfortable to enter from H4, is there a trend line on H4? So I do see one. You can enter that right there, and that's very minimum float. What is this? It's about 15 pips float, which is absolutely tremendous. If you're using a 30 pip stop loss, that ain't shit. So you enter, and you're in this one. But if you don't like to enter from 4 hours, what can you do? You can go to H1. Again, what do you see? What do you see? You have HNS right here. You have classic here. You can do that. And where is your trend line? So your trend line, not it. See. No, I don't really see one actually. Yeah, there it is. So 1 tap, 2 tap, 3 tap. You already have the confluence of being bullish. You already see H1 rejections coming at our engulfing. You have a rejection at our HNS, a rejection at classic SNR. H4 is already bullish, daily bullet storyline. So yeah, that also gives you confluence to take the trade. So how do you manage the trade, right? Okay, so you got it at the 10 line. You can do two things, right? You can say, all right, I'm going to enter with 20 pips, and let's just say 1 to 1.5. You already hit TP, and there's zero float here. So you ask yourself, right? If I'm already in a bullish trade, and I've waited. I'm on H4. I've waited all this time to enter here. Why the heck would you? Why the heck would you close your trade right here when the trade? You know what I mean? Like there's no reason for you to exit the trade. Your mind is gonna be like, oh shit, I already hit TP. I gotta close. But you know what happens when you close the trade? You know what you do? You're going to look for reversals, or that's how most people trade. That's what happens. This is a very bad mistake that people do is, okay, they got their TP, even let's just say, even if they did 1, 2, 2, 1, 2, 3, or something like that, but in their mind, they're like, oh shit, I got my TP. Now price is going to have to reverse, right? So they're going to mark out this classic. They're going to mark out this classic. They're going to mark out this HNS. And what people do is fail to determine that the price is still bullish, and they're going to start looking for sells at these levels because they already took the profit from this move. They're thinking in their mind psychologically like, oh, well, I already got the bullish move. Now let me get into these sells. And that's the reason why I like to trade H4 in higher time frames, because I'm focusing on the major trend. I'm going to focus on counter trend trades too, but why do I have to cut my trade off here when I know that I'm bullish and it's gonna go, right? That's how you guys see me catching those big ass trades, because like I'm mainly entering off of H4, H1. Yeah, and we'll go over some more of the risk plan. I wanna get over trend lines first, because once we can get the SNR and trend lines down pat, you guys can start taking live trades if you want, if you have that comfortability. And then we'll also go over different risk models. But I want you guys to focus on getting the levels right first. Is there any other questions on SNR? I take that as a no. Is there any questions on gaps? Gaps, anyone?
No, all
Mm.
clear.
I have questions about stop losses. Like, why do you use 20 and not 35?
What do you say?
For stop losses, why do you
Yeah.
choose 20 and not 35?
So for gold, I think H1 time frame 20 pips stop loss is actually pretty healthy. Before I traded gold, I traded mainly GBP USD and EU, and my stop loss size was always around like 8, well, or 8 pips maximum. But gold is kind of volatile, so I found that the balance was 20 pips. I used 25 pips as well, but I think 20 is good for H1. 25 pips is for H1 and above. And
All right, got
so
it.
this is actually how I trade, bro. I'm gonna show you right now, man. I don't use stop losses actually. I don't use stop losses, but I recommend you guys to use it in the beginning. But I don't use stop losses, and I'll tell you why. Because this is a 4-hour level right here, 4-hour trade. This is zero flow. This is zero flow, nothing. It just taps me and go. Where is this coming from? This SNR right here, right? In the live market, when I'm trading, I enter at these levels without a stop loss. And, you know, with everything together, storyline and stuff, I'm going to take this trade. I'm going to take the shot, no problem. But I don't enter with the stop loss. So I'll enter market execution layer. And if in my mental image, I see that prices going low. If it goes, it's an H4 level. If it goes down 20 pips, 20, 30 pips, I will never ever let this trade go down 20, 30 pips ever. No. That is bad. That is bad risk management. I don't let my trades ever go to hit. I don't let my trades ever go down this low. Ever. Yeah, because I think that's the reason why I don't trade just a fixed ROR. A 1 to 5, I'm done, or 1 to 3, I'm done. No, I don't trade like that. I am actually a position trader, and I found that in my psychology, if I focus more on my risk management, if I focus on this point right here the most, then all this is easy for me to manage. The fact that I entered at this level here, so I'm layering, layer. I first see if I get some type of breakout, right? You have to check that out. So what do you see in this level, in this zone right here? And this is kind of the secret sauce stuff too. So you see this gap level, right? This is 30-minute time frame. I entered from the 4 hour, but you see this gap level, prices broken out this gap level. You could enter here. Boom. So you have to be bullish at this point because you have a breakout of this gap level. You have everything lining up for you. So you want to see that. If this, for example, this trade didn't work out for you and you entered a bunch of layers here like this, what you have to see is maybe morning line price. You have to see the last SNR level, right? So which is this gap level, right? You want to see price break this level out, or even this one right here, because it's actually a confirmed gap level, right? So how do you manage that? You have to see price break above this level, close above it, even if it's just a little bit closure above. That gives you a sign of continuation. This is like literally the cheat code. There's no community, no strategy that teaches this, but this is exactly the stuff that you're here for. SNR, Malaysian SNR teachers, they're not teaching this stuff because it's fucking powerful as fuck and people get exploited when they teach somebody and other students become they take their content and they fuck it up. But this is actually the cheat code. I'm about to show you guys right now. Okay, even more. Okay. You got into the, say for example, you got into this trade, HNS level. And I don't know if there's a trend line, but let's see. Yeah, there's a trend line. You got into this trend line entry right here. How do you manage this trade? Do you just want to take your 1-to-1 and just call it a day, or you realize that this is a HTF level, you're gonna get a lot more than that, right? So how do you manage this trade? You have to look at previous SNR levels right here. You have to see the closure of these levels. So main one, the closest one is this one right here. Why this one? Because it is actually a drop decision, right? This is a gap level, gap. That's been confirmed. So what we know about gaps is that if price comes back into it again and rejects it, you could sell. But still, what you see is price broke above it. That right there is alone to tell you that price is going to continue moving up. If price goes up like this, breaks above, and then comes back down, that's only just a pullback. Whenever you have a breakout like this, for example, what happens? Price is pulling back. Price pulls back. That's just the nature of the market. So price broke out right here. Broke out. Even broke out this one right here. This is a breakout level as well. So it broke out and pulled back, right? Pulled back. Nothing to worry about because you're already bullish. You came back into your another breakout level right here. So what do? You add to your position. You add to your winners. I cannot stress this enough, but you see, this is a trend line as well. You add to your winners. You had that initial buy here. You had the breakout here. You break out here, pull back into your SNR level, and it's pushing back price up again. So signs of continuation is the break of the previous confirmed level. Remember that. Signs of continuation is the break of previous confirmed levels. Write this down in your notes. For the 8 of you guys in here, if you can remember this, you're going to be ahead of most people in this mentorship. I mean, I'm going to go over it again with everyone, but remember this right here. This will let you hold your trades much longer. This is how you see me catching those big ass trades. Let me just answer this text message, guys. 1 second.
Can I say something?
What's up?
For example, if you are waiting, you will have multiple SNR zones, which one you can enter, and you will have also you will have head and shoulders levels. How we will know that it will get rejected from this one or it will reject us from the other one?
So you have this example here where we could see there is multiple levels. What else? When pricing, actually, this is actually not valid. In real lifetime, you want to focus on the closest one first. Actually, for this example, you first got to determine the breakout, right? So this is the breakout. When you focus on that, then you'll see that this is the classic SNR, and this is the head and shoulders. That is literally what you should do. I'm telling you right now, that's what you should do. If this is a breakout, look for these two levels first. And then in between, if there's gaps like this, fine. You should do that too. But HNS and classic are pretty powerful in that regard of a reversal. So like this whole time, price is down, and it broke out. Whenever there's a breakout, most of the time you're going to see something like this. Price is going to come down to this level here, or it's going to come to this level here and then go. That's just the basic look of price action at a reversal state. It just happens that way. I don't know why. I can't explain it, but it just, this phenomenon, you could backtest it and then it happens more often than not. Look at this example right here. It comes back into this shoulder level. You can mark this one out too, but it touched this one. So how do you get involved in this shoulder? You can pull a trend line. If your trend line matches up with it, you can enter. To answer your question even more, do you have more? You have, let me give you another example. H1. Excuse me. Forward. Okay. So you see that you have these levels right here. What do you see? You have your HNS. You have a confirmed gap. And you have classic SNR. Well, actually, this isn't correct. You have to do an order of deduction where you see you have a gap level here that also was responsible for the breakout. It goes actually very deep into candlestick analysis. You got to study, we're going to study together the relationship of candlesticks, candlestick by candlestick. We're going to figure out what breaks out and what doesn't, what caused the breakout. So what you can see right here is that this down close, up down candle was the candle formation that caused the breakout, right? And ever since then, what do you see? It's the source. It became the source of this big move up. You can see that after this move right here, price also pushed up and closed above this level. So what happens is you have a breakout again. So what do you validate? You validate that this is a bullish breakout, and every time there's a breakout, there's also a retest. So price came back, retested our gap level, and it shot up. Great. So what can you determine here? This is H1. Let me see something like H4. H4, what do you see? H4, you have a gap as well. H1, back to H1. So you have those confluences, H4 gap, H1 confirmation gap right here, breakout, and this HNS, do you look at that one? That's already been, no, this one actually you don't really look at. Why? I'll give you a valid explanation why. I'll give you a valid explanation. Okay. So you have a drop decision right here, right? We can see that there is engulfing. What did price do? Price came into this engulfing, tapped it, and it tapped it again, but this tap didn't break anything out below. It didn't take price down. If this is an engulfing, what we know about engulfing is price likes to come back up and then continue down. That didn't happen. So this level was actually then broken out right here. As we can see, price closed above this engulfing level right here. What caused the close above it? It's this open and close. So you can determine that if we're bullish and price is coming back into my zone, I know this is a lot of price action right here to determine if it's just going to hold or not. But being that it's H4 a zone and stuff like that, and you have other confluences, let's just see if there's anything that I can show you. You do have confluences. You have this zone right here. We'll go over the zone later. I know you guys are like, what the fuck, bro? But this is a zone. This is a valid zone. I'll tell you exactly what it is. You're not gonna find this stuff in YouTube or anywhere. I swear to God. And I can't wait until you guys learn about this stuff. But you'll see. That's what you're here for. I know. So you see the price rejecting this level. Fuck, no, that was a bad example. Excuse me. Let me see. Let me go back into that. Excuse me. Oh, it's this one right here. Excuse me. When we learn about that, man, you guys gonna be like, what the fuck? But let's see. That back to that example actually. I wanna clear that one up for you. H1. So yeah, that shoulder level you don't prioritize. What's his name? Alex. I know you asked about multiple echelon levels, which one do you prioritize? You want to deduce which one is going to really work out for you. So for this one, you have this classic SNR level, you have the shoulder level, you have another shoulder level. So which one do you actually focus on? One other thing that you could do is when you see, okay, rewind it here and play price forward. Okay, when you see that price is coming back up to your levels, you start looking for trend lines. Let's see if we could find one. So we start looking for trend lines. Missing something actually. All right. Let me go back in time real quick. that was the trend line. And through practice, you're going to be able to find these guys. Don't worry. This trend line. Why this trend line? Why did I pull this one? Why not this one? The other one. Why this one? Because this is actually a breakout trend line. A breakout trend line, right? A breakout trend line is this. I know that price just broke out. This was the point that price was broken, right? So we already seen that price retested my breakout trend line once. So I'm going to pull it out, pull another one out to see if it gets it twice. This is trend line number T6, T6. You can see it in the notes, you'll find it. So what happened? This is test 1. This is test 2. This is test 3. You see how sharp this was. So to answer your question, Alex, how do you determine? You find these levels, and then you pair it with your trend line. You pair it when price is coming up. You find these trend lines, and you start to see which level gets rejected. So you see that this one is getting rejected. When you see that happening, you start putting your orders in, right? And what you want to see is you enter on, say you found this entry on 30 minute, 1 hour. You go into 30 minute, and you want to manage from 30 minutes, one time frame below. So you enter here. If you guys want to say, all right, say you've got this entry up here, and you see price is already rejecting it nicely. You got your entry already. You're in. You're no problem. You're in. What you want to see is a closure below this level right here. You want to see a closure below this level, mainly because this was the cause of this breakout, actually, of this one, this level right here. If this level came back, oh, sorry. If this level came, let's see, you're selling, and it came back, rejected this level, closed above, then you can start taking partials and putting your position at break even, or just closing it out if you see that this level gets rejected, especially on the 1 hour time frame, right? But if you see a closure below it, then you could say that it's going to continue down. So what happens? Okay, it comes and closes below. So what is the next point? What do you do? Okay, so you have to look at the next confirmed level. Yeah, look at this guy right here. Why this one? Because it's a breakout gap that's been confirmed. What do you see? HM30 rejected and closed above, right? Let's see if this example really defines what I'm trying to tell you guys, right? Confirm this level, taps it again, and it closed above it. You could do two things. You could, or you could do three things. You could close the trade because you saw the rejection of this level. You could move your stop loss to a closer point, or you could just close it off. But what happens? All right, you see a double rejection at our breakout gap. What happens after that? All right, well, this would have, if you left the runner, this would have given you more. But what I was hoping to see was that a closure above this level would send price up, which didn't. There's other reasons why it probably went down, and I'm only using it from 30-minute time frame, but that's how you could manage this position. And that's how you could filter out these levels. You have 1, 2, 3 levels. You already have the breakout. You have the trend line. The trend line is really important because if you didn't pull the trend line, you would say, for example, you would hope to see price come up to this level and it never gets tapped into. But the fact that you have the trend line and it matches up with one of your SNR levels already is enough for you to get involved into the trade. This is a perfect example because HNS right here, your entry is always going to come above. For sales, it's always going to come above your trend, your SNR level. So your trend line has to cross above your SNR, and you enter there. What else? What else? What other tips can I give you guys for now? It's pretty much the basic stuff. I know I shouldn't even be pulling 10 lines, but I'm doing it because some of you are trading challenges and some of you are trading live, and I want you guys to start practicing this stuff.
Is there
From
any
the
limit
start.
on, is there any limit on the touches on the levels? Like how many touches can you trade?
So for SNR levels, I know in the PDF for the classic, I talk about it needs to be fresh. Yeah, it does need to be fresh. Classic, I think it needs to be fresh always. You have to ask yourself a question. Okay, this is classic SNR. So if we to go into this right here and say this is, for example, H4 daily level right here, or actually that's not a good one. I'm trying to find an unfresh classic level. Okay, this one. You have to ask yourself a question right here. If this is a daily level, for example, do you think daily is going to start a new storyline from this unfresh level? Or do you think price is going to start a storyline from a fresh level of a fresh classic SNR here? You have to ask yourself that question. Do I want to take a swing trade or do I want to take a trade from an unfresh level or not? So the reason why I have that in the PDF is that it gives us more security. You want to focus more on fresh levels, but that doesn't always happen. If you look at this one right here, this doesn't always happen. It just doesn't happen all the time. But we like to focus more on fresh level. Obviously, there's multi-time frame reasons why this moved up. There's always a reason why. HNS levels. So sometimes what you'll see, right, is you have this right here, and you have a drop right here, so the breakout, and then what you'll see is this happen, right? Make it look nicer. So price comes back up. And then you can take that again. So HNS levels, what I'm saying is, doesn't need to be fresh. It could be tested multiple times. I would say the third tap, I would not really. The third tab I wouldn't really rely on too much, but if there is a trend line, if you have a trend line, why not try to take a shot to see something like that? The price comes up and it does something like this. Something like that. Why not? You could take it if it matches with your trend line and your higher time frame storyline, and this is you feel like the last point that price can go to and it's rejecting, take the shot. No problem. 10 lines. Oh, I don't want to even go into that yet because we have to go over the basic stuff first. But gaps also, you want to focus on it being tested the third time, and after the third time, don't really rely on too much. Let me see if I can find an example. Yeah, like this one. So you have open, close, it tapped one time right here, tap 2 times here. You don't want to take the third tap because look at this. If you place the limit here, you would have been fucked. You'd have been hurt. Okay. I think the key takeaway thing here for you guys, again, it's that thing that I wrote on the text message. How to hold your trades, right? It's to hold your trades. I think this is a very important rule is signs of continuation. Oh, this is literally the most powerful thing that I could offer you today. Signs of continuation. Continuation is the break of previous confirmed levels. Remember this and get this in your brain, because this will allow you to literally trade much less, take much less setups. And even if you talk about prop firms and stuff, if you can learn this, practice it, and get it right, you can pass prop firms with 1 or 2 trades, and you could catch this whole move. For example, say you got in this 30-minute time frame. Say you got into this move right here. How do you manage it, right? You manage this way, looking for signs of continuation. So you got this 20 pip stop loss, for example. You want to see first is the break of this level. Why this level? Because it's a gap level that was confirmed that was responsible for breaking this level here. So it's a breakout level, right? What do you see? Price just closed below it, no problem, right here. So at this moment in time, price is right here, right? What is the next level? You have another gap level. So all this time you're in this trade, people are going to freak out. They're going to get so scared that this is happening because it's reacting off of shoulder level right here or something like that. But the fact that you already have the sign of continuation is you have to find the next level. So it's this level here. What happened, right? What happened? What happened? Price closed below this level. What happened then? It pulled back. What did it pull back into? I'm not going to go over that, but it pulled back because it's a breakout. So any pullback, any push up is just a pullback, and you should still hold this trade regardless. All right. So what do you do next? You pull the next level. HNS. What do you see? Price broke below it. All right. So you move your trade. This is what already. This is 6%, for example. I'm giving you an example, right? You have this trade in, now you're looking for the next level, What do you see? You have this fresh classic SNR level. To be realistic, you could say that, okay, price came down here. All right, good. To be realistic, right? Price came down, and see how just very minimally it misses this level. This right here, it's called indecision. It doesn't know yet if it wants to test this level. So the next candle, what do you see? It's a rejection. 1 time, rejection twice. So at that moment in time, you could just say, I'm going to cut my trade. And what do you see? You could have gotten this whole move here, just managing it from these levels of breakout, which is great. How many hours did that take for it to go down? I hope I can find it. I think that was just like a day's worth. But think about it, bro. Actually, yeah, it's two H4 candles. Just think about that, like real quick. That's just one trade. Do you really need to catch 5 or 6 trades per day, or do you want high probability ones and hold it as much as you can? I'm going to go over some more of these examples in the future, but this is something that you want to think about. I passed my problem challenges like this too. So yeah, it's very possible. I want you guys to, and I guess in the beginning, what's going to happen is you're going to try to find every setup you can. You're going to try to buy or sell every setup that you see. Trendline, SNR, you want to get into it. That's why I say use 20 pips stop loss 1-to-1. Why? Because the probabilities if you winning that trade is much more higher than going for 1-to-3s. If you took this classic SNR level trade down, you can take this level. I'm pretty sure there's a trend line right here. Yep, take that. You take your 1-to-1. The probabilities if you're winning this trade is much higher than you trying to go for the spend. So you got that 1-to-1. You play ping pong or something. I don't know however you want to do it, but then you sell, and then there's something here that you could take advantage of, which is not a bad idea. But I think we'll go over that again. We'll go over that once again, how to manage your risk and what you should focus more on than not. Yeah, I think that's about it for today. We went over SNR, we did gap levels, we went over some live example demonstrations. We went over a huge thing called sign discontinuation, which is the break of previous confirmed levels. I'm going to go over that again in the future. Is there any questions before I let you guys go?
All clear from my side.
Good, man. Cool. I wish you guys have a great weekend. We're gonna reconvene on Tuesday. And yeah, in the meantime, try to get your homework done. If you don't get it done, it's fine. I'm not gonna attack you. Just try to get it done, all right?
Thanks, man. Take care and get
Right.
well.
Thanks, man.
All right, cool. See you guys.